Hey guys, welcome to Altcoin Ignition. In this video, we're going to have a look at the current price action on Bitcoin and where I think it's headed next. So if you like the sound of that, stick around. But first, all I ask in exchange for the content is that you like the video and subscribe to the channel. With that out of the way, let's get into it. Okay, so we're on the 1 hour chart for Bitcoin here. You can see that we've been moving up in this parallel channel. I've got a bit of a wave count going here, and I'm just going to sort of run through my thinking when I've ended up on this wave count, because I've had various different wave counts that I've been talking about, but this is the one that makes the most sense to me. We've got a pretty obvious 1-2 here, and the next thing that I was looking at was this being a 3-4. This no longer makes much sense because it has retraced into the price territory of wave 1, which breaks one of the main Elliott wave rules. Okay, so we could expect a little wick into here, but not what we see here. And that's simply because at the time that the Elliott wave theory came about was back in the 1930s. They didn't have futures and stuff there and the liquidations that can push prices to extreme, right? So these days we have to be a little bit flexible on the Elliott wave rules. But in saying that, I don't think we can be this flexible, right? So what I've got here is that this would actually be a 1-2 of a larger extended third wave, which is typical in Elliott wave theory to see an extended third wave, and especially in cryptocurrency, you can get some really, really big third wave moves. So that's how I'm viewing this. If you're new to Elliott wave theory, how I've worked this count is basically I've started with this falling wedge here. I know that a falling wedge typically has a 1, 2, 3, 4, 5 pattern at the bottom of it before breaking to the upside. I know that if it's an ABC correction, they can come in the C wave. So I've basically worked backwards from there, called this an ABC correction. It fits all the rules. I then know that this is the top of a wave 5. If this is an ABC, okay, I can then work backwards from there, right? And when I work backwards, it all fits quite perfectly, especially with this triangle being a wave 4, because wave 4s typically are triangles, or I should say triangles are typically found in wave 4, but not always. They're seldom found elsewhere, right? So everything makes sense here, and now we'd be expecting to get a reversal here. So if we just zoom in here, we haven't actually completed this falling wedge here. So what happens with the falling wedge is it comes in here. If it's the bottom of an ABC, you get the A lands on the bottom chord, and we then go up to B, and then we start the count 1, 2, 3, 4, 5. The 5 can end in a bit of a throwover. Okay, so I suggest if you are maybe a bit of a doubter when it comes to Elliott wave theory, go back and have a look at the video I just did recently on Ethereum. It was an Ethereum 15-minute chart. Really perfect example of classic Elliott wave theory. I managed to predict a reversal there. It worked out very well. In that example, we got what's called a throwover, where the last wave inside the falling wedge extends beyond the bottom chord. Okay, so quite a lot of selling happening there, and then reverses. So we could see that here. I mean, it could just take off from here, right? And that would sort of invalidate my count, and that's fine. You know, I'll still be willing to trade it if that happens. But the most likely thing that happens here is that this actually reverses, comes back down, either bounces off the bottom chord, or we get a throwover and it bounces down here somewhere, right? So I'm planning a trade here at the moment. Let's just zoom out. Okay, because typical Elliott wave rules say that wave 3 should end roughly around there somewhere. The way we figure out where wave 3 is going to end is take the trend-based fib extension. We start from the origin of wave 1 up to the extreme of wave 1 down to the bottom of wave 2. Now we say it's going to end somewhere down here. Now I've seen that there is a bit of a buy wall at 37,000, so I've just at this point assumed that it's going to be down here, and I'll adjust this and I'll adjust my target based on where it actually bounces, right? And the 1.618 extension is where your wave 3 would sort of come to at a minimum. So that's why I've got my target up there. I've placed my stop loss right down here. I'm not going to go for a tight stop. The reason I've placed it down here is because of one of the main rules in Elliott wave theory is that wave 2 cannot extend beyond the origin of wave 1. So origin of wave 1 is right here. So I put my stop loss in behind here. Now, if this was maybe 50 years ago, I might put it really tight, but because of all the futures being traded, it is quite common to get these massive wicks down for liquidation. So I've just given myself a bit more breathing room there. I haven't entered the trade yet, obviously. I'm going to wait and see what happens here and make a decision based on if we bounce down here. If we get a bit of an overthrow, I'll just wait to see where it finishes. I may wait to reclaim here. If we start to get a nice bounce down here, I may look to take a half position and then maybe take another half position if we descend further. And if we don't, then I'll just be happy with that half position, because as you can see, we've got a risk to reward of 3.35. So it'll be a pretty good return if that trade plays out. So yeah, that's the video I got for you guys today. If you like it, leave a comment. If you don't like it, leave a comment. But that's all from me. I'll see you in the next one.